When you're trading something that everybody else is trading, like a stock that's where the strike prices are right near your stock price and the time is not too far out in the future, you're going to have lots of other traders right there with you. So the prices are not going to get weird. But if you're trading, like this is another reason why I don't do options on things like penny stocks, because penny stocks are really wild. The prices just move in awkward, disgusting ways that can just make you angry when you realize you can't get the money you deserve for the asset, or you're paying a really high transaction price. So a lot of times, if you have an option that expires soon and it's close to the strike price, you're gonna get a price that's a little more fluid because it's easier to find a buyer on the other side if you're a seller, or to find a seller on the other side if you're a buyer. But if you pick a strike price that's way out of the money, and then an expiration date that's way out in the future, that's when you start getting weird stuff that happens. You may not even have a buyer on the other side of the transaction, or the transaction cost may be so massive that you just realize you don't want to do it. And that's so in a way, you can think about it like a dating service, right? A dating service is a market. So imagine if I'm a person who, if actually, let's say it like this. I knew a lady who actually ran a dating service, and she was matching men with women mostly. She did mostly heterosexual couples. And what she found was, she said, it's really a little bit strange for African Americans because I got a whole lot of women signing up, and I don't have a lot of men. And so what she said was that she'd have to work to find men to sign up for the dating service, and she had to make sure that these were not men who just wanted to have an extra girlfriend on top of the other two or three women they were dating. So one side of her market was very full and liquid, the other side wasn't as liquid as it needed to be. And then on top of that, if she had, say, a person that was really tall, and let's say a 6'5" woman with a PhD, who makes 400,000 a year, it would be really hard to find that match, right? She'd have to search high and low to find a guy that would fit the criteria that most of us would expect for a person in that category, right? So that's an example of how the more obscure the trade, the harder it is to find the match. And what tends to happen is that you have the market maker who closes the gap. The market maker is like the matchmaker. They're bringing together the buyers and the sellers, the boys and the girls. And what ends up happening is that the harder it is to make that trade, the harder it is to find a match for that 6'5" woman with the PhD. The more the transactions costs go up, right? So the market maker says, "Hey, look, I'm gonna have to charge you double because I gotta really go search and pay. I literally have to go and pay money." Theoretically, right? Whatever, it's going to be very costly in terms of time and money for me to find someone that's going to match with you. So your fee might be higher, or whatever it is, right? I know that's a weird example, right? It shouldn't be that way, but that's life, right? And so ultimately, with a market, the best markets are the ones where you have lots of buyers and lots of sellers. Or if you imagine selling cars, if you're selling cars in a small town where there's not a lot of people and you're trying to sell an expensive Mercedes, the ability to sell that car is really limited. So you have to really work hard to make that deal happen. And so, or if you're selling obscure art, like someone selling a 14th century painting, you can't just go sell that at the grocery store. So Sotheby's will charge you an insane transactions cost, a lot of money to find a buyer for that art. Okay. So ultimately, this is what a market maker does. That's why when you buy a stock and sell a stock, or buy an option and sell an option, you're going to have different prices because there's different transactions costs.